Good morning, Senator Chamberlain. Welcome to your committee. We have House File 2 before us. Would you like to move the bill?
Yes, I would, Mr. Chair. Thank you.
Okay, House File 2 is moved. Proceed with your testimony.
Yes, Mr. Chair, thank you. Well, what we have in front of us is House File 2. This is what, I'll give a brief overview, then staff will walk through the bill for us. We refer to this as a federal conformity bill. Conformity is accurate, but it does not, of course, conform 100% to all the federal changes, and you'll see that as we go through. This is a bipartisan effort. The commissioner, we've worked with the Commissioner Bowerly and the House and other folks across the aisle to get this done. There is a sense of urgency to it. It has to be done so vendors and other folks out there can get their work done so they can file 2016 tax returns in a timely manner and with less hassles. With that said, just a couple of things. So many of you are familiar with the bill. Many of the provisions in this bill were heard last year. There are 4 new provisions. One of the provisions is the Olympic medals. They were taxed, they will be exempt. Working family credit, there's an adjustment in this bill for that. It'll help, it'll raise the limits a bit and help the marriage, soften the marriage penalty a bit. 21st Century Cure Act and the Combat Injured Vets Fair Tax Act. Those are 4 new provisions in the bill. What this bill will do in the end is it'll make it easier for tax filers, Minnesotans to file their 2016 returns. In some cases, the rules will be clear, but that's hard to say when you're talking about taxes. It allows some processing of refunds that are with data sitting there. And lastly, of course, there is an overall savings to this proposal. It's not a lot. It's about $21 million in the first year in 17. And as you look at the spreadsheet and they walk through, you'll see the numbers will go up and down, and they'll be explained as well. So with that, I'd like to have the staff walk through the bill for you.
Ms. Pollack, are you going to do that for us?
Mr. Chair and members, I'll just briefly walk through the bill, and then Mr. Wilms might go through a couple of big items on the spreadsheet, or big concepts on the spreadsheet. As Senator Chamberlain mentioned, this bill would bring into conformity the Minnesota income tax codes and the provision of the tax code that apply to the calculation of income for Minnesota tax purposes. For Minnesota taxable income, the starting point is federal taxable income. So when changes are made at the federal level, the state has to decide whether they will conform to those for purposes of calculating Minnesota taxable income or not conform. And this bill does conform to all of those federal changes. One kind of caveat to that is that Minnesota is continuing its approach that it's had for several years now of conforming to 179, Section 179 and bonus depreciation expensing in its way, where the 20% is subtracted in the first year, and then the remainder of the expensed amount is subtracted back over the following 5 years. So we are not conforming in that aspect. As Senator Chamberlain mentioned, there are 4 provisions in this bill that were not included in the omnibus bill last year, and he mentioned those, and I won't say anything further if there are no questions. But other than that, the bill is the same as was adopted by the legislature last spring.
Mr. Williams, do you want to go through the spreadsheet?
Thank you, Mr. Chair and committee members. I'm happy to go through the spreadsheet. Before you, you should have a spreadsheet titled Fiscal Impact Summary, Federal Conformity for House File 2 1E. This is all based on the November forecast data, and what you're looking at here is essentially 2 tables. The first table, contained within the first 7 lines, row 11 through 17, identifies the general fund impact. You can see on line 17, that's the total. So that's the bottom line that Senator Chamberlain was referencing, the reduction of revenue in the first year of 21.7, and then you can see continuing through the fiscal years, the additional impact of House File 2. And then beginning on line 22, that's the second table that I've referenced, and that's the detailed summary of the Protecting Americans from Tax Hikes. So on line 15, you'll see that that's the largest number within the general fund summary. And so it's broken out in greater detail, beginning on line 22. And so if you follow it all the way down to the last page of the spreadsheet on line 87, you can see the total impact of the Protecting Americans from Tax Hikes Act, and that feeds back into the general fund item. And so the biggest reason for the reduction in fiscal 17 has to do with a lot of the provisions having retroactive effective dates and being front-loaded in that first fiscal year. And so those are kind of the basics that I wanted to describe about the spreadsheet. And so that concludes my summary.
Any questions of either Ms. Pollack or Mr. Williams? Any questions? Mr. Williams, I have one. Going to 2021, how do we account to this, to the bump up to 62 million there? I mean, we're going along and all of a sudden now it's 62 million. Do you know what happens that year?
Mr. Chair and committee members, the biggest reduction has to do with additional bonus depreciation expensing that comes online in those later years. And that's the, it's front-loaded in terms of a revenue increase in the front, but then as those provisions carry through, the Section 179 and bonus depreciation start to become more prominent in the revenue reductions later on.
Okay. And Mr. Wilms, I'm sorry I mispronounced your name. It is not Williams. Okay, moving on then. Senator Chamberlain has moved Bill H.R. 2. Are there any questions or testifiers from the audience? And I do have Commissioner Byerly here on my list. Commissioner, you want to come forward?
Good morning, Mr. Chairman
Welcome,
and members of the committee. For the record, my name is Cynthia Bowerly, and I'm the Commissioner at the Minnesota Department of Revenue. It's good to be with you all again and again here in room 15, which is beautifully restored, and we are appreciative of the opportunity to work with you here again. I want to thank Chair Chamberlain and congratulate him on his new chairmanship, and thank you so much for the opportunity to hear this bill so early. Vice Chair Senjum, we appreciate the opportunity to work with you again, and Ranking Member Rest, we're happy to be able to work with you and all of the committee members. We look forward to working with the committee throughout the session, providing any information we can to be helpful to all of you. Please let us know what questions you have and what information we can provide. We do want to thank the committee for hearing this federal update bill very quickly. As I sent in a letter on December 29th to the leaders of both houses of the Minnesota legislature, in order for us to open tax filing season on January 23rd and have our system updated for federal law, we need this bill to be passed very soon. The date that I put in the letter was today, January 11th. We appreciate that we are here today, and we appreciate the House is able to move this quickly. House File 2 represents the full set of how Minnesota typically conforms, so it does have that 80% add back. That is how Minnesota has conformed regularly in the past, and we do request that this bill move cleanly and quickly across the floor as possible so that the governor can sign that. And then I have with me Assistant Commissioner Terry Steenblock, and we'd like to share with the committee how we will implement this bill for Minnesotans as we move forward. As you're aware, this bill does contain conformity for both 2016 and 2015. 2015 is already filed, and so we will make this as easy as possible for Minnesota taxpayers. And in a moment, I will ask Ms. Steenblock to explain to you how we will go about that. You may have questions from your constituents, and so we want to provide you with that information. As committee staff have described, this bill contains many tax relief provisions for Minnesota businesses and families. 35,000 college students and their families paying for higher education will see a total of $4.3 million in tuition in tax breaks for that tuition. 70,000 teachers will be able to deduct the books and supplies that they provide out of their own pockets, totaling $3 million in savings for those teachers. Homeowners who refinanced their home or went through a short sale will see a tax cut of $17.4 million, and 73,000 Minnesota homeowners who pay mortgage insurance will see tax breaks totaling $11.6 million. And as the chairman said, Olympians and Paralympians, and we know we have many from Minnesota in the last Olympics, will not need to pay, will have excluded from gross income the value of those prizes. Businesses will also see significant tax reductions and benefit from this bill. It truly is a bill that has a little bit of something for everyone. 15-year straight line depreciation. We know that those depreciation provisions are very important to businesses so that they can keep one set of books for those depreciation schedules. Expenses, for example, election to expense mine safety equipment, a 7-year recovery for certain motorsport racetrack facilities, expensing provisions for film and television productions, and then bonus depreciation and increased 179 expensing. This bill would also provide a permanent exception for certain types of active financing income for businesses under Subpart F. And this is just a sampling of some of the business provisions in the bill. So we do appreciate the committee hearing this so quickly. We'd be happy to answer any questions. And as I mentioned, we do want to make sure that we can help Minnesotans as much as we can with adjusting these, the filings particularly related to 2015. For 2016, we will turn to that work as quickly as we have a bill. Again, we only have a few days until January 23rd when we open, and we will open on January 23rd because it is the date that the IRS has decided they will open, and it is very beneficial for Minnesota taxpayers to open on the same day as the federal. As Ms. Pollack noted at the beginning, Minnesota taxable income starts with federal taxable income, and so does, frankly, the filing system. When folks file, it does flow through from that federal return into the Minnesota system. So if it's permissible with the committee, I'd now like to ask Ms. Steenbach to describe how we will implement this bill for Minnesotans.
Thank you, Commissioner, and welcome, Ms. Steenbach.
Thank you.
Proceed with your testimony.
Mr. Chair, members, for the record, my name is Terry Steenbach, and I'm the Assistant Commissioner of Individual Taxes. And I'm here today to talk a little bit about how we'll implement the federal conformity for both tax years 2015 and 2016, just so you're aware of how that process will work. And as you've heard many times today, the Minnesota individual income tax return begins with the federal taxable income. And when federal tax law changes are made, the simplest solution for Minnesota taxpayers is for us to conform to those federal law changes. Federal conformity eliminates quite a bit of confusion, additional schedules and forms, and can provide the individual taxpayer with additional relief. So our approach for implementing these law changes for 2015 and 2016 will vary. So I'm first going to talk about tax year 2016 and how we would plan to handle that. As Commissioner Bauerle mentioned today, we are requesting that the action be taken very soon. And by taking action soon, it ensures that Minnesota taxpayers can file their return with many of the benefits offered at the federal level. If you pass the bill soon, it gives us enough time, we believe, to do several different things, and I'll briefly describe that. So once the bill passes for tax year 2016, we would immediately begin to identify the changes that need to be made to forms. For example, we would be removing the Minnesota nonconformity form that's known as the M1NC, and then we would be making adjustments to some schedules such as the income additions and subtractions known as the M1MA. Some of the forms that, should conformity pass, some of the forms would not be necessary anymore. They're only necessary if Minnesota does not conform. So we would be taking a look at those forms and making adjustments accordingly. We'll next notify the software providers as well. We need to do that quickly so the software vendors that provide electronic tax software preparation have the changes that they need to be able to update their software, allowing taxpayers to electronically file an accurate return at the opening of the filing season on January 23rd. Finally, we will need to make some internal system changes as well. So we'll be looking at our systems and identifying the changes that we need to make internally so that we can process the returns that come in with the conformity changes for taxpayers that are affected by that. And so what I've described here is extremely simplistic, and it does not fully reflect the work that goes into getting ready for a filing season. It simply is just meant to provide you with a few examples of the things we would be doing if the bill passes. We do think we can do all these things and be ready to open with the IRS and our announced opening date, which is, again, is January 23rd. And there are many benefits to opening at the same time as the IRS as well. So we want to make sure that we do that. Having this in place by the opening date means that taxpayers for 2016 can file accurately the first time and receive the full refund that they're entitled to the first time. We can eliminate a large amount of work associated with reviewing and adjusting returns after the filing season. And that's important because reviewing and adjusting returns after the filing season will negatively impact the processing of property tax returns. So that's our plan for 2016. If it passes here quickly, we believe we can get the changes in place and taxpayers can file accurately the first time when we open on January 23rd. Now I'm going to talk a little bit briefly about how we'll handle tax year 2015. As you know, tax year 2015 has already passed, and taxpayers have already filed their returns. We processed 178,000 2015 tax returns that were affected by federal conformity provisions. So if this bill passes that reflects full conformity for 2015, our goal is to adjust all the returns. That means we will do our best within the department to eliminate or reduce the impacts to taxpayers by handling the changes within the department. However, there are always very rare situations that prevent us from being able to do this. So what we will do is we'll review all the returns that are affected, and one of three scenarios will occur. We'll review the return and we'll adjust it as appropriate and issue the additional refund amounts from the changes to the Minnesota law. We will review it, and we may need to request additional information from the taxpayer. And if that were to happen, we would send the taxpayer a letter, request that additional information, and adjust the return upon receiving that information. And there may be some real rare situations where, for whatever reason, we wouldn't be able to adjust the return. If that were to happen, we would send the taxpayer a letter letting them know that we were unable to do that, and giving them the option to amend their tax return. In all of the situations that I've described, the taxpayer would receive a letter from us that would explain to them what was done and what action was taken on our part so that they clearly understand that. So that is how briefly we'll handle 2015. Our goal is to have little impact to the taxpayers and be able to address all those internally. I want to talk a little bit about when the work will happen. So our first priority will be to make sure that we're ready to open for 2016. So we'll identify forms and system changes to be able to be open by January 23rd. Our second priority will be to process all 2016 individual tax returns and adjust 2015 tax returns that were impacted by the mortgage indebtedness provision. There's some significant impacts to the taxpayers who were impacted by that, so that's why we're prioritizing those to get those adjusted. And then our third priority will be to review and adjust 2015 tax returns. We anticipate that that would happen concurrently with the release of the property tax returns and would be completed by the end of the calendar year. So I'm going to briefly talk about what it would cost to get this work done. Retroactively making the changes does come with a cost, and we would need some additional resources to review and adjust the returns, mail notifications to the taxpayers, and then communicate general direction and handle additional inquiries from the taxpayer. The benefits to this approach is that the department can do much of the work instead of the taxpayers, but we will have some additional costs. Consistent with earlier estimates, we expect the administrative cost to do this work would be around $1.565 million, with the majority of the costs, or all of the costs, coming in fiscal year 18. I want to thank the chair as well for your assistance with helping us with this bill, and I will stand for any questions.
Just I wanted to add for the benefit of the committee, House filed, as as Assistant Commissioner Steenblock mentioned, there are costs to the department to be able to do this work, and we have projected that we will be able to adjust the 2015 for all of those taxpayers, or as many taxpayers as we're able to with the information we have by the end of the year, if we have the additional resources to do so. Otherwise, what we are doing is competing with the processing for property tax returns. We have over 800,000 individuals in Minnesota who file and receive property tax refunds. And so that work is happening at the same time that we would be attempting to do this work. House File 2 does not contain an appropriation, as you may have noticed. When we were in the House last week, what we discussed with that committee was that we would continue to discuss costs for the department as we move forward, and we could talk about those as we move forward with any other tax bill, and we would appreciate the committee's willingness to continue to talk about costs in that fashion as well. As Assistant Commissioner Steenblock mentioned, the cost that we will incur would be in fiscal 18, so there is time for us to continue those discussions. So we would hope that the committee would be willing to continue to discuss that with us as we move forward. Again, this House File 2 does not include that funding.
Sorry. Question for either our witness, Senator Bach?
Thank you, Mr. Chairman. Commissioner, the lines 56 and 57 on the spreadsheet and lines 72 and 73 are the bonus depreciation and 179 expensing. Maybe you can explain to the committee why those provisions in this bill actually raise revenue? I think it'd be helpful for people to know, because it does raise about 30, by my math, about $38 million, the bonus depreciation and the 179 expensing.
Commissioner Barr?
Mr. Chairman and Leader Bach, and I would also, of course, defer to committee counsel and financial staff. But those provisions at the federal law, when we have been conforming in Minnesota, I believe for almost a decade in Minnesota, what we do is allow for that initial depreciation and then add back 80%. It's my understanding, I wasn't at the department at the time, but that was done in the early 2000s to help with some budget impact. So we have, for a long time in Minnesota, added back 80% of what those deductions are allowed at the federal level. And then that amount is being able to take over time. So it really is a timing issue, and I believe Vice Chair Senjum noted earlier that there's this large cost towards the end of the time frame on the spreadsheet, and that's largely a result of advancing that revenue into the state, but then allowing for that deduction to take place over time. And again, I'd certainly defer to committee staff for any clarification on that.
Senator Bach?
Well, Mr. Chairman, it just seems to me, and maybe we'll hear from the chamber, but finally at a time when we have some money, it seems like this would be the time to do federal conformity on 179 expensing and bonus depreciation. It would cost us about $38 million that would go right into the hands of Minnesota businesses and proprietors, and $54 million in the out biennium that would be tax reductions for them. And it just seems to me, when we finally have, so the reason in 2003 that this was done, this 80% add back, is going into that 2003 session, Governor Plenty then was facing my memory's correct, about a $4.3 billion deficit, and we just couldn't afford it. So to the extent I think we can be in federal conformity, I think that's a good thing, and I think when we have some money, we should make an effort to do that.
Thank you, Senator Bach. Senator Chamberlain, I'm sorry.
Yeah, this is really becoming a great day. I would agree with you, Senator Bach, that we will be looking at those as we go forward. Some of those, it's 179 specifically. I used to do these calculations in bonus depreciation at my prior job, and I do them for several states, adding back 10 here and subtracting 20 there. It was really fond memories, so I'm familiar with it and understand how it works. So, but I appreciate your willingness to discuss that going forward. It's a good idea. Thank you.
Others, Senator Dietrich.
Thank you, Mr. Chair. Do you know, so like in the working family tax credit, that is spread across the state. So the people that benefit from that working family tax credit, about 50% live in greater Minnesota and 50% live in the metro. On this bonus depreciation from, I believe it's also a lot of farmers that take that. And so do you have any data or any thing that shows, is it spread out? Is it all, metro businesses and farmers? Or do you have any data that shows a breakdown of it, if the people who benefit from that, because it is a lot of people and families and small businesses, is it spread out across the state, or who benefits from it?
Commissioner Bowerly?
Mr. Chairman and Senator Dietzich, I don't have a geographic distribution, but we can certainly go back to the department and see if we have that information.
Senator Chamberlain?
Not that I can add much to that. I would agree that, 179 and bonus depreciation, it's really kind of immune to the geographic location. It's just if you have the equipment and you want to take advantage of those expenses, I think Senator Miller and others here who have businesses understand that as well. So if no matter where you're at in the state, it just depends on whether you have a business and you have equipment you want to take advantage of those particular options.
Senator Bach?
Well, thank you, Mr. Chairman. Senator Chamberlain, as long as we're singing Kumbaya, you and me, something else to think about. Conformity bills sometimes are a place where the Senate gets the opportunity to get some things done that maybe the House might be more difficult. And so let me suggest one where we did that in 2014. In 2014, the Senate hung on to the conformity bill for a little while, and we fixed it up for the House. Governor was a little upset about that, called a press conference, kicked me and Senator Skoye all around the room. But one of the provisions that the Senate put in that conformity bill that then, because of the timing, I think the department really wanted the bill because we were in late March at that point. One of the things that we put in that year was getting closer to federal conformity on the estate tax provisions, because we're not in conformity there. We were at $1 million at that time. Federal conformity is $5 million. Senator Skoye, actually, when we brought the conformity bill to the floor, we had it at $5 million, but we were getting such incredible pushback from the administration and others that we lowered it to $2 million. But we got considerably closer to federal conformity in the estate tax provisions from $1 million to $2 million per individual in 2014 in the conformity bill. So, Mr. Chairman, if you don't want to do it in this bill and kind of poke it down the throat of the House, because I think the only way they're going to take it is if the Senate sends it to them, because not a lot of Minnesotans benefit from that, but those that do, it's an important provision. And I think to the extent we can be in federal conformity is better than not. So if your effort is to try and do it later, I wish you good luck with the House. I think the train that could ride on, that you maybe could get it from the House, is this one, and there's precedent to do that because we basically doubled the amount that was exempted in estates in 2014 in this very bill. Just something for you to think about.
Senator Chamberlain?
Points well taken, Mr. Chair, Senator Bach, points well taken. I'm agreeing with you with the estate tax, but I would just caution that as we all know, all of us sitting here, that you start doing these things to this bill, it's hard to keep a nice, clean, neat, tight bill going through these bodies. And we would really like to do it with this bill. This is a great impact for a lot of Minnesotans that all of us here can agree on, and agree to, and agree with. If we start doing those little things now, we could open that spigot and we'd have a hard time, getting the water back behind the dam, as it were. So I'd like to keep this nice and clean, neat and clean, so we can have a happy commissioner and a happy governor, and a happy Senate for another week. So I would discourage any of that. I'd like to run it through like this so we can get it done.
Is it to this point, Commissioner?
It
to
is.
this point, and then Senator Reston.
Thank you, Mr. Chairman. And Mr. Chairman, I appreciate your interest in my happiness. I will tell you that January 23rd is my birthday. Nothing better than to open tax filing season on your birthday. But what we're really talking about is the convenience of Minnesota taxpayers and being able to allow them to file. And I will share, I do want the committee to know that we asked for this conformity bill very early. We appreciate how quickly the bodies have been able to take it up. If we are not able to get it done very soon, one of the lessons that we learned from the changes that were made in the middle of the, in 14, I believe it was 14 filing season, when we asked people, we did something in the department that was very unusual. We asked people to stop filing their taxes so we could update our system and the vendors could update their systems. And that was a very difficult challenge for the vendors and for the state and for taxpayers. And so if we're not able to implement this before tax filing season, then what we would be asking the committee to do is to make the effective dates after tax filing season. And then what we would do is go back, as we will for 2015, and make those as many adjustments for taxpayers as we can. We would not anticipate this year that we would be able to implement a change in the middle of tax filing season. It's terribly burdensome for tax filers. It's very confusing to them. And I will tell you that our tax filing world has changed a great deal since that time frame. We are facing more and more identity theft related tax fraud, and so some of our system is built to be barriered against that kind of effort, and so our system is more complex than it was even before. And so I just wanted to make sure you had that sort of administrative information as you consider this bill. Thank you, Mr. Chairman.
Senator Reston, then Senator Gazelka.
Just another comment on that. I had hoped that in the restoration of this building, that the acoustics would be improved in this room, and much to my great disappointment, they are not. A comment about the bonus depreciation and 179, I do think it's just informative to my understanding that the Section 179 is typically used by smaller businesses to do their expensing at the end of the year, to buy a piece of equipment or so on. And the bonus depreciation is more typically used by larger corporations. But my question has to do with there are a couple of bills in that right now on the estate tax to raise that individual limit to $5 million. But I wonder if you could explain how, just in general, the Minnesota administers the estate tax differently from the feds, and what kind of an impact will that have? Not just the fiscal impact, but the revenue impact, but does it have any impact on how the structure of the estate tax liability operates in Minnesota?
Senator Rest, is that for the Commissioner?
For the Commissioner.
Madam Commissioner.
Thank you, Mr. Chairman. And
Mr. Chairman, Commissioner, you really do have to speak a whole lot louder or bring the mic closer to you for me to understand you.
thank you. Thank you.
hear
Commissioner Barley.
Thank you, Mr. Chairman and Ranking Member Rest. So I haven't seen the estimates on those, and I think you were not asking me to describe the fiscal impact. You will, of course, get official estimates from the department's research divisions on those. But what happens is, so when folks file here in Minnesota, we, of course, use a different, this is not on the income tax return, so which does start with federal taxable income. But we have folks file here in Minnesota, and so that Minnesota threshold, the $2 million exclusion that we're working towards to 18, is on our filings directly.
Senator Gazelka.
Thank you, Mr. Chair, members, and Commissioner. We would love to do Section 179 and estate tax conformity if we knew the governor would just say he'll take that right now. But So we thought about that right away, Senator Bach, just thinking about, how much can we conform to and balancing that with what can we get done right away? Because we really wanted to pass the bill right away, showing good faith with the governor that we're trying to move some things forward. But as you're hearing the conversation here, Commissioner Bowerly, just think about the other things that we can accomplish, because and I'm glad that the governor put out a tax relief bill. Our hope is that in the end, it'll end up higher than that, but at least we're moving that direction. But this is our first good faith step, hoping that the governor will continue to work with us moving forward.
Comments? Probably not. Senator Miller.
Thank you, Mr. Chair. With all the bipartisan talk here, I felt it was a good time to put a plug in for the Purple Caucus, and I want to officially invite Senator Bach and Senator Chamberlain to be members of our Purple Caucus this year.
Senator Miller, welcome to the Tax Committee.
Always promoted. Okay. Anyone else? Questions? Yes, Senator Dietzig.
Thank you, Mr. Chair. I just want to make sure that everybody understands this as I read this, and I'll ask the commissioner, but to just let taxpayers know if there are changes, depending on when they are, if there are changes that you go back and due to their taxes in 2015, if they end up owing more, I want to confirm that they won't be penalized on that there is language in here at the end of the bill. If I'm right, sure. It's hard when you only have one hand, under Section 10 that says that they will not be penalized because we were late in conforming. So I just want to clarify that and confirm it.
Commissioner Barber.
Mr. Chairman and Senator Dietzig, that's correct. What we will do is issue any additional refund in any instance that we're able to, or gather additional information from taxpayers, but we will not be penalizing anyone. And to the extent that, for example, if someone has already paid in some additional amount, for example, if an individual had a mortgage indebtedness item, that we will refund that money, of course, so that we will make taxpayers whole if the law is changed for 2015. Thank you.
Okay, any more questions of revenue staff? Commissioner or others? Okay. Was that Senator Bach, did you have something? Okay. No more? Well, thank you so much. And the next scheduled witness here is Ms. Cadoon from the Minnesota Chamber. Welcome to the committee, Ms. Cadoon, and proceed with your testimony.
Mr. Chair, members of the committee, my name is Beth Cadoon. I represent the Minnesota Chamber of Commerce, an organization of 2,300 businesses across the state of Minnesota. From those small ma and pa all the way up to the Fortune 500. About 80% of our membership is with those that have 100 employees or less. That's why the Section 179 provision is so important to us that I'll talk about in just a minute. I just want to make two main points. One is we are here in strong support of this federal conformity bill. The ability to ease the compliance cost of administrating the tax code is very important. And the more we can conform to the federal definitions, the better, and keep the deviations to a minimum. So we're here in strong support of the passage of this bill. But the second point that I wanted to make really deals with some of the conversations that were just occurring, dealing with those investments in the state and trying to encourage Minnesota businesses to be able to invest in their Minnesota operations and how we can reduce that cost and make it more competitive here in Minnesota. Section 179 and bonus depreciation are important provisions that help do that. This is something that, as you can see, has had strong bipartisan support throughout the years. This is something that we had conformed to in the past. As was mentioned, we stopped doing that when we were in budget deficits. We are no longer in budget deficits. So the more we can, if we can make opportunities to conform fully to Section 179 especially, I think that will be very beneficial to Minnesota to really help encourage our Minnesota business to be able to invest, to improve their productivity, which will be very important as we're trying to grow our economy. With that, I'll stand for any questions. Thank you.
Questions, members? Seeing none, thank you, Ms. Cadoon. Okay, next I have Mr. Egger and Mr. Fragnito. Welcome to the committee. Mr. Egger, why don't you start?
Thank you, Mr. Chairman. My name is Paul Egger, Vice President of Governmental Affairs for the Minnesota Realtors. We're a business trade association, and we have 18,000 members statewide. Like Ms. Kadoun, I'm here in strong support of this bill. We do appreciate, as always, the bipartisan support for federal conformity. I just want to highlight the importance of the home ownership provisions in this bill. This bill does contain conformity for 2015 and 2016 for both mortgage debt forgiveness and the deductibility of mortgage insurance premiums. Those are really important provisions, and I just want to highlight in particular the mortgage debt forgiveness. This is an issue that this committee is very familiar with, where a homeowner has a principal reduction or debt forgiven by a lender, and through that process, at the federal level right now, they're not penalized for that debt forgiven. It's not, they're not required to include that as taxable income. But unfortunately, because we're not in conformity right now, there was for state tax purposes, those unfortunate individuals and families that were hit with a surprise tax bill for that debt that was forgiven. And so this is an important provision. The market is in better shape today than it was several years ago, and so the number of short sales have certainly gone down, but there are always some. And for people that find themselves in that situation, it's a difficult situation. They've experienced an economic loss, and anything the state can do to ensure that they're not further penalized by having to pay tax on income they never received is a positive thing. So we're just here again to support the bill and appreciate how quickly the legislature is moving to get this to the governor's desk. Thank you.
Thank you, Mr. Egger. Any questions of Mr. Egger? If not, then Mr. Fragnito.
Thank you, Mr. Chairman. My name is Gino Fragnito, and I'm the Government Relations Director at the Minnesota CPA Society. We're a professional association of approximately 9,000 certified public accountants across Minnesota. And we want to thank you on behalf of the clients that we represent for addressing this early and taking this bill up so quickly. Early is always good, especially when we can address it before the filing season. And CPAs have always been a strong proponent of early conformity, not only because it helps us in our easy and short season as we go through the process, but it also helps reduce the complexity and reduce the cost of compliance. And as others have testified to, this is a great start. We look forward to the continued discussion about full federal conformity and certainly appreciate the opportunity to be part of those discussions as we talk about the bonus depreciation, the estate tax, and the Section 179, just to name a few of the areas where we could have some additional discussion on conformity. Thank you.
Okay, questions for Mr. Fragnito? Anyone? Guess not. Any other individuals from the audience wish to testify on House File 2? Seeing none, Senator Chamberlain, would you like to affirm your motion and provide some direction for this bill? In terms of destiny?
Yes, Mr. Chair. I'd like to move House File 2, recommend to pass, and send it to general orders.
Okay, Senator Chamberlain has moved that House File 2 now pass and be referred to the floor. Any further discussion? Sensing none, all in favor say aye. Aye. Opposed, nay. Bill is adopted. Thank you, Senator Chamberlain. Senator Chamberlain, do you have any further scheduling comments for the committee at this point?
No, just we might have something this Thursday, be informal, nothing formal this week. Probably next week we'll start hearing some bills.
Okay, if not, then committee is adjourned and call it chair.
Thank you.